Hello, everybody. Happy Friday. It is February 25th, 2022. Probably going to get through this as quick as I can because I am, again, trying to make it to the Traders Expo here in Vegas every morning. So we won't have an actual trading session. We're just going to do the pre-market here, and then I got to get going. So, real quickly here, because I'm not trading today, I did take two trades just before the open. I took the long here off our eye level with a nice bullish divergence on multiple time frames. Was only able to get 5 points out of it. My expectation was actually that we were going to get resistance up here, but because I came to the monitor and I had this nice pattern here off this level, I jumped in, was able to get that, and then as expected, it started turning, and I'll show you why I expected that really quickly here. And that's because we were pushing right up into this level right here. And let's see if I can highlight it. You can see that swing low right here, and then coming across pretty much almost every time the market came down, bounced right out of that zone there. So as we were pushing up into it, I was expecting there to be resistance, but I saw this really short time frame thing and thought I could get a scalp and was able to get that. And then as it started correcting back down here, as it pulled back to that level again from the back end, you can see a really nice bearish divergence. In fact, the 1 minute had a really clear bearish signal there as well. Where were we? Somewhere right there. So a nice bearish divergence. There's basically a flat RVI. If I can get the line straight. Thanks NinjaTrader for getting that set in there. And then so nice 1 minute and nice 512. I pulled the trigger again, only taking a single contract, and I took it actually down. I was going to take it to 4,300, and then I drew the fib on, and I said, you know what, I better take it off at 01 just in case they bounce right off the 50. So I was able to get 7 points down because I got in at 08 and got out at 01. So those are my two little trades here this morning. Going back to yesterday, I didn't trade. We did our pre-market, and then I was out to the Traders Expo, which has been a really great experience so far. I've learned some new things that have definitely helped me just in the last 24 hours. I was there starting yesterday morning at 8, was done around 4, and just coming into this morning, I feel like I've already changed as a trader. So good shit going on over there. And we've got a good day today. John Carter this morning and a couple other big names. I think we're going to see who Jared Tendler and what's his name over Futures Trader 71. And we've got Harry Boxer tomorrow. So a lot of really good stuff today. So I can't wait to get out there. Anyway, let's take a look here. We got Carolyn Borden, the Fibonacci Queen, I believe, at the end of the day. Some really good, basically a trader's paradise for anyone who's a trader nerd. So let me see here. Yesterday when we came in, oh, this is great. This is good stuff. So we came in, did our pre-market yesterday, and we highlighted 89 up into 95 there. We highlighted 42.13, which remember, that's that major swing low all the way back that we bounced off of that 42.1275. Yesterday we had a whole crap load of stuff stacked there. There were like 9 levels all sitting there. So again, because it was such a strong area of support back when we bounced, coming into there with everything aligning was also our next area. And then once we could get through there, the next area of expected resistance was 42.50 to that 42.62 eye level. And look at what happened here. I just couldn't have worked out any better yesterday. It came up right into this zone. It breached the top end, definitely breached it, but I mean that's a little peak. And as you can see, had a lot of trouble getting through there. Came right back up to 89, could not get through. Eventually got through, pulled back, kind of held the level, not beautiful there, but held. Came up and came right to 42.12, pulled back, and then came up and at 42.50, literally I think to the tick, the market just could not break through for literally 30 minutes. And then it pulled back, and if you can see here, it's a 3-minute chart, pulled back and bounced right off 40, our next eye level, and came up and pulled back and bounced off the top end of our next expected resistance zone, and our eye level to the tick bounced right off 62 and tried to continue going, and then got this, very failure basically. And here we are coming into the overnight session. Sorry about that. And it looks like the bulls are still trying to break out to the upside here. Um, so that's where we are bringing us into this morning. So we're going to go ahead and jump up to our high time frames on down, and we'll go ahead and take a look. So let's go on up. Hey LT, if you missed the beginning, some pretty good stuff. So you might want to go watch the recording later today or tomorrow when the high definition gets uploaded to YouTube. Let's see here. So again, the quarterly, the 3-month, not much to say. It's going to be closing in one more day. So Monday night, we will have an official close candle and a new quarterly candle coming up. Again, everything looks super bearish up here monthly as well. Nothing really has changed other than the range has continued to break lower. And then on our weekly here, again, we talked about a potential bullish divergence when price was still kind of hanging up over in here, but it's gone to push to a lower low in comparison to that area that we bounced at 1275, and we have a lower low on RVI. So no divergence at all. Definitely it looks like a potential reversal candle if it closed looking like that at the end of today. But we'll have to see. Another thing I've done is because we retraced and basically broke through all the key levels of the first leg that we were looking at here and came all the way through the 70 and the 75, I've gone ahead and looked at the larger leg that we're dealing with here. And let me see if I can delete this out. The larger leg that I visually was looking at, which was just down to this major pullback here after that full first move out. So this pullback here from that low all the way up, and I threw it on there again. It's hard to say what fib retracement is the most valid when you have a bunch of these major swing lows. In fact, this one right here, you can see we're holding the 61.8, but we were originally looking at this major pullback down here and the bounce out because we were watching the first leg and then it continued. So we drew it higher to the actual new high. So you can pull this back and look at some of these other legs. And the one that really stuck out to me was this, especially because the retracement of the whole push from the COVID correction low all the way to our all-time high. We got a nice confluence right in that little zone. So I just left it up there because I saw the ratios all kind of fitting together there. So nothing too special about it. It's just helping me orient a little bit. And I guess we could say right now we're still holding 38 of that smaller leg. The larger leg here from the COVID correction low all the way to the all-time high is probably going to be in play. I mean, it won't be surprising to see the market continue to correct, come down, and the 38 retracement of the more relevant larger leg is all the way down at 37.70 here. So there's plenty of room. That's another 500, 400, 500 points down. And then the 50% is what? I mean, we're looking at almost another 100 points back down just to get to that type of correction and to come test these highs back from February of 2021. Or I'm sorry, not February of 21, February of 2020, just when the market started to kind of get the floor drop out. So that high over there is 3,300 basically, give or take. So that's what 1,000 points lower, and that would be another 25% of the market, or give or take a few points. So that's always possible, but this is the bigger picture we're looking at here. Definitely not looking too strong until we get to our daily. Daily gives us our first bullish clue. And remember yesterday we said off of the lows we did have a bullish divergence down there, although there wasn't a huge confluence of signals. So I wasn't sure if we were really going to get follow through, but that was our first scenario from yesterday. So that daily did close with the bullish divergence. And we did, of course, follow through to the upside yesterday in the trading market. As you can see from, if you go back to the beginning of the pre-market session, we went through all of that. So another thing that's interesting to note here is where we just bounced is basically the next area between the two chop blocks or areas of structure. So if we go all the way back here, this is where we came down and got some really violent buying going on. Pullback, got the buyers to come in, never came back from there. And it also was an area that we found some demand in the past. So a lot of demand over in that area. It's also, like I said, we've got the major zone basically from up here around 4230 all the way down to that major low at 4,000, 4,005. But you can bifurcate the region, or at least it might not be exactly 50%, but you can separate it into these two zones. And again, look at what happened yesterday. These zones were on here for a few days, and the market came down. It did peak below, but basically held that region, and now here we are bouncing back up. So on the 4 hour here, remember we said the 4 hour didn't give us a nice bullish divergence yesterday off that overnight low. So that's why I said we had kind of alternating time frames, and so it wasn't as strong of a clue. But remember, anything's possible, and the bulls could still kind of hold it and follow through, and that's what ended up happening there. So the 4 doesn't have the strongest bullish divergence. What I'm noticing here is if the bulls don't continue to push, and that candle closes, we could argue that there's maybe some bearish divergence going on at the moment, but we'll have to watch that. It's going to take time before this closes, another probably almost just about an hour from now. So a lot of time for things to develop. This thing could continue to chug higher, right? And let's go down to the, whoops, I thought I went to the 60. I just moved the chart. Let's go down to the 60. And again, this is that region I told you when I came in this morning, I expected resistance, but I still took that long on the pullback and was able to get the 5 points. But again, we're in a region that makes sense that for there to be resistance. We also have, you can see I drew on here earlier, some bearish divergence on these highs here compared to previous highs. So we're pushing to new highs compared to back here, and yet the RVI is pushing to lower highs. So even both tops there, I think, are valid. We've got much higher highs, RVI is still much lower. So there's still an agreement there, the 40 and the 60 minute, but again, in the next half hour, we could see this continue to chug. If it doesn't continue to chug, that's the expectation. Like I said, we are right at an expected resistance zone in here, and a pullback wouldn't be surprising. But remember, anything's possible, so we have to be aware of both sides of the equation. So let's take a look here. We have to consider what leg we're in, what we're pulling back into, and what we could potentially push up into and find trouble this morning. We've already kind of covered everything. The market looks really heavy. We don't have the strongest confluence of bullish signals from yesterday's low, which tells me we still have lower to go. It means also that we could come down and, again, pull back and get some appreciable retracement and get some type of bullish divergence on the pullback, and then it goes. But right now, I don't have the strongest confluence. Of course, the daily is there. So with the daily there, I mean, if you look back and you just look at history, every time you get a daily divergence, it can turn into a really protracted push. So we don't want to ignore what's going on here off the lows. But like I said, because not every single time frame is in alignment, I'm a little skeptical that that might be it. That could be it. That could be the low, but I'm skeptical. So let's take a look. If the bulls do continue to push this morning, we have to consider what's going on above here. So whether the bulls just rip out of the open and don't pull back, or they do pull back somewhere into the region below us here and bounce, we need to consider what's above. So if they do get above the high that we made in the overnight session, we still have the eye level that's just a few ticks above it. In fact, it's a few points. So about 6 points above the high we made in the overnight is the eye level. And again, we can't discount how powerful those levels are. So that might be something important to keep in mind. But I'm going to go ahead and take a look at what else is lining up here and what might make sense, not just because it's an eye level, but because of other things going on the chart. So let's see here. We've got the major sell-off, remember, from our expected resistance zone. I'm never going to let this go, that we called 70 to 80 here. We came up, made the high at 86, and then failed and held that 78, 75 so many times on these tests up here. So from that failure all the way down to the low, we are just around the 38%, or just between the 38 and the 50% retracement. And you guys know how powerful these levels are. In fact, Look at where we found resistance yesterday. I should have had this drawn on the chart. In fact, I might have had it on there. I don't remember. I don't think I did. Looking at the major leg down, 38% was basically the high of yesterday. So I neglected to look at the larger leg here, but had I have looked yesterday, not only did we call every single what's it called, resistance area. Again, looking back down, I love this. It's just unbelievable how well this works. You know, again, holding this region, pulling back, coming up, holding this region, pulling back, holding that region, coming up, holding the bottom end of the zone at 50, pulling back, holding 42.40, and then going ahead and pushing. And had I have drawn that larger retracement, that was the 38% retracement, almost to the friggin' tick. So this stuff is just so powerful. Where was I? Came up, and so this resistance over here, I was talking about the retracement. Sorry, lost my focus there. So there's the 38, and we're kind of playing around. So being around 38 to 50% here, this is, as you guys know, a potential resistance area. Pretty much 38 to 61, and then we know that there's extensions. These are areas of retracement in a leg that makes sense for turns when you're in a trending market. So, you know, I know it's a big range here, but holding below this area is not a good thing for the bullish case this morning. Again, that double bottom was what we were looking at here coming into yesterday. So just before the open, we made a double bottom, and I told you that I was seeing a daily bullish divergence down here, and I couldn't see it on the 4, but I saw it down here on the 60. So again, I just kind of went off a little bit, but I think this is important to point out here. We talked about this double bottom right off 41.11, the eye level, and said it could end up breaking out to the upside. If it could get through that high there at 41.51 to 41.65 right there, that was our resistance zone. Anyway, coming back here, that just caught my eye. I didn't really mention it. So coming back here, if we push, if the market gets through that 24.50 level, we cannot ignore the fact that the bottom end of our chop block is right here at the 50% retracement. So I had the blocks kind of copied over here on the 60-minute chart, but they, you know, as the chart moves to the right, I'm going to have to continue to draw this, unless there's a way for me to anchor it to the right side of the chart, which I don't know how to do, which would probably just mean having to go in and figure it out. But 50% of the entire push down, and you guys have to remember, this is important, especially on a large leg, 50% is right into our expected chop block, the top end of that chop block. And again, there's that level, 43.54, 55, 43.56. That should sound really familiar to you. That's where we came down and expected to get our bounce here a few weeks ago and bounced out. That's the region that we're pushing up into. So I'm going to go ahead and highlight this. Basically the eye level down into that 54 level. Remember, 54 I believe was the high to the tick, or 56. So right there, that shaded region, really important this morning. If the bulls get through 24.50, to me it looks like either the 50% or somewhere up around this 54, 55, 56, 60 area. I know it's a little bit of a range, but again, that's just what it is. We've got the 50% at 44 even, and then we have the eye level at 61, and again, that is that major zone where we bounced out. In fact, that swing low here is 54 even, right? So it's a little bit of a range. There's a whole bunch of stuff right in that region. And then to add to that picture, we also have a really strong supply zone right in there. And again, I've been bringing in supply and demand concepts. And again, when you have an area where the market aggressively sells off from, the argument is that there is some supply up there, some more sellers if the market ends up coming back up into that region. And vice versa, it always seems like when there's a lot of supply, if you're coming down from the opposite side into a previous supply region, that can then turn into a demand zone. So that is interesting there. If we get through that, we still have the shaded region that we looked at because we had, you know, before we actually started bouncing higher here, and that is this area right here around 15. So let me highlight this here. So we have this level marked, and I drew it in as a horizontal line. 12, maybe I have to take that back. I'm looking at the wrong thing here. Give me 1 second. So there's 1075. So 1075, 15 quarter, and then that swing low there at 2275. So this little 10-point range that we mentioned, I think even yesterday, is that next zone up above us. I might have mentioned it last week, is that 15 quarter, again, that swing low there at 22. And then we do have that line that I drew in that has been relevant there. We came right to it here and failed right there again at 44.11. So that little shaded zone right there, just like yesterday and the day before that and the day before that, probably going to come into there and find some trouble. Doesn't mean it has to happen, but we want to be aware of that zone if we get up there. So in the most immediate area here, if the bulls get through the overnight high and get through 24, we've got this zone here, and I'm sorry it's kind of wide, but somewhere around, let's just say 50 to 60 here. A little bit further than that, I think the next relevant area is going to be that 11 to 20. Again, give or take a little bit right in there. And there's one last level we can't ignore, and that is this level right here at 43.81, 81.75. So just be aware of those levels this morning. Mark them on your chart. Of course, getting through 15 area opens us up right into this zone that I mentioned probably a week earlier, and that is this little zone here just around let's call it 44.40 to 44.45.50. Again, give or take a little bit in that area. So those are the areas above us to be aware of if the bulls end up going. Remember, the bulls could pull back, have some major sell-off, and still get recovery. And if they come back, these are the areas we want to be aware of. So I'm not saying the market's just going to rip out of the open. I'm just saying if they do, be aware in the most immediate area. On the pullback, we need to look at what's below us here on the pullback. We have the leg from that low to that overnight high that we want to look at. Let me get the number here. High is 1750. Put this in at 1750. And that was 0175. I like to make sure they're to the tick. And so look at what we have here. The confluence can't get much better than what we have. I'm going to zoom in, and you might want to disregard this previous shaded region. Might even want to move it back to yesterday. The 38% retracement of the leg happens to be our major eye level at 40. Again, within a few points. So right over there, wouldn't be surprising to see some type of support or something go on here if the market pulls back. Keep in mind that the major low there, they might peak actually into the major low if there was that type of scenario does happen. That's a possibility. But I'm looking at that 40 and that 38. A little bit deeper, look at the swing high that we got here. This is a 60-minute. I'd like to actually dial down a little bit more, but it's better, I think, I've been learning, it's better to just get all the major levels here based on 60-minute stuff rather than getting too into the weeds. So on the pullback here, that 13 area happens to basically be our 50% retracement. And again, that swing high there is 1675. So again, it is what it is. You need to be aware of the actual swing high, because even though you might have a region that makes a lot of sense, a lot of times if there's a swing high front running it, the market will come into that high and bounce and never come into the actual shaded region or the zone you want it to come into. Again, with the markets, everything's always kind of fluid. So sometimes it will come down and it will hold the swing high to the tick and bounce out, or even bounce a tick in front of the swing high and go. Other times it's going to come into the region. So you just need to be aware of the whole area. So 1675 is that major swing high, and then we got that little zone there down to the 50%. So on the pullback there, we've got, again, this major swing low is 2750, but I'm more so eyeing about 35 to 40. If that doesn't hold down there, I'm thinking somewhere around 4209 to, again, that swing high at 1675. And then the 61.8, which really is that golden ratio, is right there with our 50% of the previous day and the eye level. So each of these regions to me looks really, really good this morning. And then if those don't end up holding, we're right back into, and I'll draw that famous line here. This high is 41.64. Been drawing these lines across major swing highs and lows that we want to be aware of. And so, what did I say? 64? Yeah, 64 even. So let me again just make sure that this is exact. And we'll make that dotted so we know what we're looking at here. So that could be a potential bouncing point there if they get through the zones we just talked about. And, you know, being that there's an eye level another 10 points below it, I'm not going to shade in the whole region. I think that that's really relevant, the actual swing high itself. If that doesn't work, then we're down to lower, and maybe 51 will be a relevant level, but I don't see enough from the 60-minute here to give me, well, you know what I do see? And this is something I forgot to bring up, and that is, let me zoom out here. Going back. Okay, so I just wanted to quickly mention, you know, the other day when we were bouncing back and forth between this stuff, if you just look back, we were bouncing in between this crap before. And I thought I was mixing up yesterday with what I just saw here. So yesterday I neglected to point out that the fact that we were chopping for the day before that and then into yesterday, all in that area, is not surprising if you just go back. Look what the market did in that area earlier, chopped around up and down sideways, and then earlier chopped down up and down sideways in there as well. So looking at where we are now, let me just take a look. Again, I'm mixing up the low we made now with all the chop from a few days ago. Yeah, never mind. So I think that's all we have for today. Again, the market could rally hundreds of points up or hundreds of points down, but in the most immediate region, these are the areas that we want to be aware of, and I'll just do it one last time here. We've got, if we get through the overnight high in 24, we've got this region somewhere around, let's just call it 45 to 61. I know it's pretty wide. If they get through there, there's this level I'm watching at 82, and then a little bit further, it's up into that 15 region. And then if that 15 region doesn't hold for the bears, we'll go all the way up to that 45 area. And I do like the fact that 61.8 extension happens to be basically right there as well. So watch that stuff. And there were some other retracement things that I wanted to bring up, but we're just getting right down to the wire here. The market is about to open, and so you guys are going to have to get ready to find some trades if you're looking for that kind of stuff. So I guess I'll end it here. Got a little long-winded on some things. Let me see if I have a chance to just show you really quickly. I'm going to show you really quickly here. I know the market's about to open, but I just want to show you where we bounced yesterday. Again, I've made the case of why it made a lot of sense from like 2 or 3 perspectives. There's one last perspective I want to bring up here, and that is the fact that we were watching this leg here, and we noted that the market couldn't get through the 38 and 50% retracement of the smaller leg. And look at where we came down and bounced and made a low yesterday, just a few points below the 61.8. So these ratios, again, I'm just emphasizing, they work over and over again. They don't work every time, but they work often enough that there's an edge. So have a great day, guys. The market's just about to open here. I'm going to head out, get to the Traders Expo here and see John Carter this morning. So enjoy your day. I will see you guys for regular scheduled programming back on Monday of next week, where we'll finish out the month of February. So have a great day. Have a great weekend. We'll see you on Monday.